What's up, everybody? This is Jonathan Rose, owner of Masters in Trading. This is the second part of a two-part video. The first one, I talked about systematic risk. What's going on with GameStop right now is risk towards the entire system. Do I think it's cool that hedge funds are losing a lot of money? Fine, I love it, no problem. Traders have been getting ripped off for a lifetime, for years. But what's going on right now is game is showing real systematic risk of the entire marketplace. So therefore, I want my downside hedged. I want to make sure I'm long vol. That's why it's such a great time to talk about position management. In front of you, I got a little model portfolio. I got 4 different stocks. These are all live positions. I have these positions. This is real risk on that I have. How I manage risk, how I want you to manage risk, how I want you to think about it is don't think like you have 4 different positions. You have one position. You have one position. You are managing a portfolio. You are not managing 4 different positions. When you're managing a portfolio, the best way to do that, the easiest way to manage your risk is to look at your Greeks. Your Greeks are going to be your delta, your theta, your vega, your gamma. The other Greek is your rho. Rho is interest rates. With interest rates trading 0, rho is not going to affect your options trading. If interest rates get above 3%, we can readdress that. For right now, don't worry about rho. Delta. Delta is just your stock exposure. My stock exposure right now is I'm short 100 shares. This position is kind of delta neutral. When a trader is delta neutral, they have volatility exposure. They don't have direction exposure. If I were to buy Uber, 500 shares, I would be long 500 delta. If you're long 100 shares of a stock, you're long 100 deltas. If you're long 500 shares, you're long 500 deltas. Traders need to control their delta exposure. So for instance, if I would have asked one of my guys, hey, what's your opinion? And they tell me that they're bullish volatility, but they're also bearish the overall market because they're concerned about systematic risk. And then I looked at their position and their position is long 3,000 deltas. I would say, dude, great opinion, but your position doesn't match to what you think is going to happen in the overall market. So you can be right, but yet wrong because your account loses a bunch of money. So make sure that your delta exposure is reflective of your overall position. My delta will get bigger as the market goes down because I'm also long gamma. When you're long gamma, it's going to influence your delta. When you're long, the market goes down, I'm going to get shorter and shorter delta. If the market rallies, I'm going to get long deltas because my gamma is going to affect my delta. For those who do get confused about gamma, the easiest way not to be confused is to look at your theta. Theta is the opposite of gamma. So this position right here is costing me $520, $520 to hold for the day. With my negative theta, that's going to give me positive gamma, right? Because theta and gamma are going to be opposites. What else can we learn? Well, what about volatility? Vega. We are long vol. Long vol. How do you get long vol? Long vol trades long options, right? Long call, long put. SPY, long puts. Fuel cell, I'm long puts. And NDM, ONEM, I think I have some call spreads still left on those. So long puts, that equals long options, long vol, short theta, long gamma, and then the long puts give me that short delta. Most important is you're always checking your delta. You're always checking your vega. You're making sure that whatever your opinion is on the overall market, that you're expressing the proper opinion within your position. I've seen this so many times where people have a strong opinion. They're telling their friends about it. Oh, there's so much more risk in the market. I think the VIX is going to spike. I think the market's going to go down. And that ends up happening. And they don't make shit because they're not managing their Greeks. Get in front of these moves. Know what's going to happen or anticipate what's going to happen before it does. Right now, this is a delta neutral position, but it's a long vol position. I believe there's systematic risk in the overall market. I'm long volatility and I'm angling my portfolio to be short deltas. I will get short deltas because I'm also long gamma. So as we move, my short delta exposure will grow. My name is Jonathan Rose. I'm the owner of Masters in Trading. Learn how to manage your position by looking at a portfolio. Don't look at stocks individually. It doesn't matter. You own the portfolio. Thanks for watching.